in today's video, I'm going to show you guys how to calculate take profit effectively by using Falcon mechanics. So this lesson is going to be taken from the Falcon mechanics, and I'll try to explain it a bit further than Mark does, and I also have a few examples to explain. And with that said, I'm also going to show you the settings of the tool to be used to be calculating the take profit, right, and also be explaining a few concepts you guys should understand when managing trades, right? So this video is going to be showing you guys the settings of the tool, and it's also going to show you how to apply trade management using the tool together with your experience or your knowledge in Falcon FX. So with that said, guys, let's get into the video. Okay, guys, so here we have this pair HK33, so it's Hong Kong 50. Okay, so in this one you can see that we have our 1 2 3 there. We're just waiting for what's an entry, and then we take it to the downside. So majority of the time what usually happens is that when price goes down, guys, it usually reverses way from the 90% area or the 100% area back to the upside, right? But because this is a strategy, we're trading a strategy that we want to be consistent in, it is usually advisable that you use the 90%, right? What is the 90%? It's a 90% rule. That, what does that mean? When price goes down and follows the 90% move, there's a higher chance that price might retrace back to the upside. You see, so it doesn't mean it's going to always reject from the 90, but there is a higher chance that price action might reverse from the 90% 100 area right here. So what do you do? Because here we're trying to be systematic, we're trading a strategy, right? So let us make an example on this pay. So I'm just going to be playing the replay tool right there. So this was a trade that was taken, I think, last week. Okay, so the trade goes down, and first of all, we're at the 90%. Here, another rule is that I want you guys to take away from what we're doing is the 90% is going to assist you in getting out of trades and try to remove greed from your work. Why? Because most of you guys, you find yourselves that you become too greedy, right? And you wait for long, and you find yourself giving away a lot of profits from a particular trade just because you wanted more profits. So with this one, we just use the structure, guys, where the start of the trade or the start of the structure to where the nearest low or high is, depending if it's a buy or sell situation, but the same is the same for an inverse situation. Okay, so right here we're going to be starting here to this low. So in this low, what was the 90%? It was right there. So if we're trading systematically, what we usually do, we put our retracement tool right, and then the take profit should be here. Your take profit levels should be around there, so you can check there the price on the left, which is usually there. Let's say there's the 90%, there's the price 17.411.0, right? So that is the take profit area. What, and then, like, I want you guys to see what happened in these areas. Fine, price did reach the 100% area, but that doesn't mean that should be a take profit. Why? Majority of the time you may find that, you see what happened here, price touched with a week. Okay, price touched with a week and it retraced, right? Some of the time you may find that your broker that you're using didn't even fill here, right? The spread didn't come to these areas, and you may find your trade not being closed for TP, right? Because majority of the time price usually closes on the TP once it is past it, for like different brokers and different spreads, because they offer different price levels as well. So you need to see the price action just has to be past that. And with the 90% rule, majority of the time price action will pass a little bit there, and then it's gonna reverse. And if your take profit here, for example, was 90, your take profit would have been hit, right? And you would have walked away with around how many percent? 3%. Let's just say 3%. And then let's continue playing this. You see what happened right after this. So okay, guys, so this happens. Okay, and then let's say it just retraced there, maybe you are at your 90%, you are not taking profit, the trade retraces now, right? Retraces to here. Maybe you find yourself getting out of a 2.5 just because of greed. You wanted to hit 100%, right? But what happened? It did touch but didn't close. It went back up to 2.5, and then maybe you were trailing your stop. For an example, you were trailing your stop, and you were taken out for the 2.5. What is, you was going to be able to be taken out for a what, for a 3%, because you were greedy. Now the price retraced, and sometimes price action won't even hit the 100%, right? It was just going to retrace from the 90 going up. Just that on this example is not that, but you see there's a lot of scenarios where price does that, because you know what the 90% rule is, right? When price reaches 90% of that price action, that particular price action, there is a higher chance that price might reject, because price has filled 90% of this space. Okay, so now we're going to be using what, the 90% exactly, to be using for a take profit. It doesn't matter that the take profit is 2%, 3%, because we can't judge take profit based on returns. That your take profit is usually what, is usually 1:3, 1:5. No, your take profit will be based on what? Will be based on the particular structure you're trading. So that is why Falcon FX is very good, because here we do not judge by 1:5, so 1:what, but we're using what, structure, proven structure, not numbers that people out there on the internet usually spread around. That me, I get out of 1:2, that is my take profit. 1:3, what is that, bro? Here we're using structure. You don't use random numbers to calculate a TP, but we're using structure that is going to be defined by the 90%, the Fibonacci's and stuff, right? So now let's go to the second example of how this thing works. So let's check CAD CHF, okay? So let's check CAD CHF, okay? So let's go back in time, because I had these examples right here. So okay, let me select the bars. Okay, bars is good. Let's go to the 1 hour. Okay, this is another example, fam. So here we're playing this this entry. Okay, so we're playing this entry. Let's remove that. So we see that our low is right there. We have our nearest low down there, so we're calculating it a better take profit area. So we start from where the move started to the lowest point, the lowest low, right? So we have this Fibonacci tool like that. So let's play it and see what happens on the 90%. So price is stalling, and then we go, and then you see what is happening. We go to the 90%. Now price is starting to reject here. At least here your take profit would have been hit, right? But now it's starting to reject, and then when now you are using random take profiting areas, and it's you are not systematic. What happens is you put your stop loss here, maybe you're trailing it. Now you get out of the trade fast, and you are just close to your 90%, because majority of the time the 90% is gonna work. Okay, so let's continue. There's a lesson I wanna explain here. Okay, we did at least hit we did at least hit our 100, and then yeah, that happened. So in another scenario, you wait for your 100, doesn't hit your 100, maybe lingers on to 90, and then boom, a spike, right? Because when you were waiting for so long, right, you're waiting for so long, you do not know where the proper take profit area is, and then you get taken out of lesser profit, or even a break even. In some scenarios it does happen. Yeah, but because you guys are not well versed in the take profiting areas, you see. So today your lesson, it should be, your take profit shouldn't be based on a 1:3, a 1:5. Do not cap it, but then your take profits is going to depend on the structure you're trading, and also the stop loss you're going to use, because also that affects your take profit, right? But here is a good take profiting area, right? Because I'd advise that you use this strategy when let's say you are in break even, or in drawdown in in your pro firms or whatever, or your personal account, right? And then once you are a bit up, you can start neglecting this this rule of using the 90%, because sometimes you may find that price might go lower than that, right? But what if it doesn't? But if this is a good way to structure your trades from now on to the future, you can just do it. You can just do the strategy forever. Put it in your trading plan. You know that, okay, every time I'm looking for a trade, my take profit is gonna be here. But another thing is, you shouldn't you shouldn't have a take profit alone, right? You also have to trail your stops. Okay, let's say maybe prices is maybe almost the 90%. You can just maybe lock 50% of the move. Okay, lock 50% just in case this thing retraces, because it can even retrace around these areas, but not even hitting the 90. Retrace, price comes here, takes you out. At least maybe it comes to the break-even point. At least you came up with something, right? You didn't just lose like on a winning position. You didn't just take a break-even on a winning position. Okay, right? So yeah, that is another example of what I'm talking about, and this is going to be the last example. And after the example, I'm going to show you guys how to set the Fibonacci tool to be like that, right? Because it is a bit difficult to just set this thing on your own, right? You need a bit of assistance. So I'm gonna show you after I'm done with this last example. Okay, so let's go back in time. Okay, so yeah, let's go to the 1 hour time frame, and let's go back. Selected bars. Okay, this is going to be where it started. Okay, so let's go to the 15 identify our structure. Okay, so this was just the 1 2 3 touch continuation flag. Okay, so yeah, here it is, and then let's play it. So our entry is there. Okay, so my entry was there, and by the way, I took this trade, guys. I remember it was when last year, yeah, 2023, it was last year. I remember taking this position in my funded account. But yeah, so let's go to the 1 hour, and then we play the example, right? Okay, so now we're playing the example. So I forgot, let's put our tool from where our move started to here. All right, that is going to be our 90%, and then yeah, you hit our 90. Look what happened. Immediately you hit our 90 nicely, we go to the 100. Now we're leaving a week. You see what the problem is? Your 100 won't be tagged. I know majority of the time, and we're using brokers, this thing won't be tagged for a TP, because your prices here, your price levels wouldn't have passed here. So now we're retracing, but where did price close? Very nicely at the 90%, because what I said is the 90%, the majority of the time the price is going to reject there and go up. You see the 100, the problem is with the 100, most of the time it doesn't hit the 100, just reverse here from the 90%, right? But sometimes it does, but most of the time it doesn't, right? So that is why the 90% retracement tool is used to calculate proper take profiting areas, mechanical take profiting areas, right? Okay, and in this case, it was 4.6%, which is very good. 4.6 is very nice. As you see, like this thing that I'm saying is, it is you're doing yourself a disservice if you are using take profiting areas based on like 1:3, 1:4, 1:5. You don't know, because we're trading different structures, right? Different structures are not going to be the same. The results of the take profit won't be the same, of the returns won't be the same, because they are based on what? They are based on your stop loss, size of the structure you're trading, and also the structure, how the structure is overall. That is going to affect your return in P&L. Yeah, because let's say if a trade is not like a 1:5, and then now you are forced to look for a 1:5, and you find yourself being left out of a number of important trades that might make a difference in your trading. Okay, so let's continue playing this one. You see what happened now? This thing retraced back, right? Back to these levels, 1% to like 1.8%. Let's say maybe you have locked here, maboom. Now you don't know because you don't know where to put it. The 90s hit, you didn't take your profit because you're waiting for the 100, right? And then it retraces, takes you out to 2.9. Guns, you were going to come out of a 4.5% trade because you weren't greedy. You just worked out with the what? With the 90%. Okay, so that was today's lesson, guys. Now let me show you the settings of this tool, right? So this is the style, so you can just screenshot everything. Yeah, you can also pause the video to see how we set this Fibonacci retracement and how to set it like that. So these are the coordinates you should be using, and the colors you're going to choose yourselves, the colors you want. And this is 0.7. This is for and something different. Maybe I'll make a lesson on it on a future video as well, of how I use the 0.7 70% area and what it's for. But it's not for take profiting, it's for something else, so stay tuned for that. But yeah, this is how you set it, because yeah, now we are doing the take profiting one. So this is one for 100, 0.5450, 0 for 0, and 0.9 for the 90%, right? And then we can go down. These are the only levels that we use. And then we can go down. Background has to be on 0, like exactly. Click reverse, and yeah, you use percentages here, not values, percentages, and mark the levels as well. They have to appear. It has to be exactly like this. The text has to be there, and the font size 12, like exactly like that. And then you will save it as a template. So this is the coordinates. I don't know if this is needed, but yeah, here it is like that. And also with this, so it has to be the same. And yeah, guys, so that is it, guys, for today's video. And if you're new to my channel, can you please hit that subscribe and like the video, and also the usual family, you can also like the video and share to your friends. And also, guys, please turn on the notification bell to be notified when I'm dropping important videos, so you cannot be left out, guys. And as that said, guys, I'm going to see you on my next video.